Good morning and welcome to the Breakfast Club. We just finished up with Michael here on his live channel and watched him do some live trading. And those of you who did watch his live trading, I think that's an excellent example of, even as a master trader, you can get beat up pretty bad in the markets, even when his tools are working. That does not by any stretch influence anything of what I believe about Michael's principles. If anything, it just reinforces for me how great that guy is. You know, when you can take 4 losses like that and be okay with it. And there again, he showed they're very small losses and low leverage in markets like this where it bounces around quite excessively. Something to be, I think, something he could be quite proud of. You know, to take 4 hits. You know, a lot of us, you sit there with your mouth hanging open, like, holy smokes, Michael took 4 hits. Everybody's going to take hits, and I think in a way it's kind of good that you can see someone of his caliber can take 4 hits in a row, and he doesn't flinch. He will be back tomorrow, and we'll be with him tomorrow. Watching him trade again. And I think all those people who were following every trade he took, and you were all trying to make bank off of that, I think that also emphasizes the key point he's trying to make is like, look, don't copy me. And I don't think that was by any stretch of punishment. He wasn't trying to punish anybody for following him. He genuinely was trying to read the markets as he saw it. So anybody who was in on any of those trades who took losses right now, there's thousands of dollars out of the markets because people were following him when he said clearly, don't take this trade, don't follow me on this trade. So yeah, let's look at people were following him when he said clear. Kurt, good morning, buddy. I love the fact that you were just like right there in the morning. You're with me, buddy. I love that. Thank you. So I did a lot of trades in that morning, and I'm gonna, out of respect for Michael, I'm not gonna show you my trades. Some of them are contrary, but I did okay. I'm looking at this. Let's just review this morning here. Now, this is not in any way trying to belittle Michael's intents or on anything that he did at all. I think what he taught us this morning about this run below the lows. When we get a low that is run out at a specific time of day, I love the way he was emphasizing time. He repeated time a few times. Tekmila, hello, how are you doing today? I'm doing very well, thank you, sir. And I love the idea that he talks about the swing that occurs at that right here, when he was talking about this swing that occurred at 3:30 in the morning, New York time, between 2 o'clock and 5 o'clock. He has that swing that occurred, and he confirms that swing on the second candle, or the candle that creates the swing low. So he sees that you can literally get short or get long on that one in a fair value gap. We're turning. You can see that turn that occurred right at that 3:30 time point, and he waits till the third candle's finished and closed, and if it creates this imbalance here, and then you have an inversion. I love the inversion there. Like, yeah, awesome. discussion on a specific time and when it closes to get a reversal, and look at the range that you're presently in, and then look for 50 to 65 or 62% retracement. I caught a oops. I caught a nice little turtle soup off of that this morning, just because we're anticipating the highs that he was talking about. I caught a nice little turtle soup off of that, and then trailed my stop loss up super tight. So when it came down, it took me out here. But you know, you look at your breaker right here, traded all the way back to the breaker, and then pulled away. So doing your range by range analysis. So here's your next breaker. We break these highs here. When you run up past them into this breaker, finally hit breaker here, trade all the way back to the breaker here, then you trade back up into rejection block. We don't get the highs taken. Rejection block. Then we create another breaker when we get below these lows. So look at this candle, it's really inside this one here. Then those fair value gap inversions. I love the fair value gap inversions. The way Michael's discussing them and working them, I thought was awesome. And it really, I'm not here to evaluate whether or not he's good or bad. He's amazing, absolutely amazing. And I love the fact that he took 4 losses and took it on the chin like it was nothing, and love him for that. Absolutely love him for that. That's like saying, look, man, I'm 100% confident in my skills. I'm 100% confident in what I do, and sometimes I get the market wrong, and bang on. So much respect for that. So we have another extension. So now here, when I saw this, he was talking about this range created from the open to 930. When we retraced back into that, I was looking at 62% of that, and I was going to go long here. But then I saw it still driving right through the 62, and I thought, okay, maybe it's going to return to here, and then the mean threshold of this order block. And as soon as it hit that order block and kicked off, I got along there for, and then I panicked because he was saying he was going short. So then I got out right there. I think I got in right here and got out right there. So again, there's your breaker up top. So a return to the breaker. See that one right there? The body. See how it hits the body of it right here? Then we retrace back down into a discount in this range here, inside that fair value gap that Michael was talking about. Look at this one over here, small little guy right over here. Draw that one out. The bodies of the candles are respecting that right there. The high. Tag it. We extend past the range back into the breaker again. Then we take that range there, or this longer range, and extend that. Pull your fib tool from here. Back to here. 70% retracement. Coming back to fill that fair value gap right there. And then go long. Again, it's easy for me to do this after the fact, and I'm sure Michael could do just as good a job of explaining this after the fact. But I want you all to know that man is absolutely brilliant at what he does. So, full respect for that. So, for your 1 minute fair value gap now becomes that inversion, right? We hit through it. You see us wicking through it, and the body's again respecting the fact that we're not gonna close below that. Tag multiple times, and then it finally ran out of we had a body run above it, and we never got back into it here, but then we run the highs out. And then we have another fair value gap here. We get a candle goes below it. We come back up. We don't even get into it. And now we're right back into that, bouncing off that 1 minute fair value gap again. So you can see how this chop can beat up the best of us. And I tell you, if it's beating up Michael, I don't feel so bad when I get beat up in it. I really don't. Just popping in to say hi. Tough day for ICT today. Yes, absolutely. Always love to hear his thoughts on price movement to see if my thoughts are the same or similar to his price moves. Wishing you all the best. Thanks for popping in, Steve. Or Steve. Derek. Sunshine San Diego today. Oh, good. It's about time. I hear you've been getting lots of rain down there. So we'll be out and about. Enjoy your day, my friend. Mungo. All right, bud. Well, that was fun. Kind of made me think he was doing it on purpose. No way. No way would he do that on purpose. Not when he's got that many people watching him. No way at all. Everyone who doesn't listen to him, they probably lost a lot today. Yes, indeed. They probably did. So I'm glad he didn't trade back to that inversion he was looking at, because he was looking at going long. If it came back to his inversion, well, that would have stopped out there as well. We just ran this low out here. This 1 minute fair value gap again. Tough range to be in. You can see how if it's just, so you got to look kind of breaker to breaker now, right? So here's the mean threshold of this candle. If we lose that now, start looking for these lows and then looking for that mean threshold to get taken there. So we just ran the low here. We're coming back to the mean threshold right there. So we'll see if that holds. We got a body below that inversion fair value gap now. We've just popped back into it. So now short there. Not that I'm going to take any more trades today because I've taken a lot in here. So just look for that right there, off of there for a short. And we want to run for this rejection block and the low. The stop loss would go above, right above the high. Oh, the rejection block here. No, I don't think he would do that. Not with 15,000 people watching him, and right before the Robbins Cup, and he says he's going to do this every day. I'm going to trade this every single day. Then, no, that's a lot of reputation he just put on the line there. And to just go out and do something malicious like that, no way. It doesn't seem like an ICT. I don't think he's out to teach somebody something and share that with them. He wouldn't hide into some malicious trade there just to hurt somebody. And he was telling people, don't copy me. And those people who copied him, because he wasn't sure. At least many times he said, I'd like to see this. So in defense of him, I just don't think he's out to be malicious like that. I think people increase the leverage on their trades. Every time he lost, you think, all right, now he's going to come back with a vengeance here and he's going to take this out, put more leverage on. He's definitely going to come back on this one. He's going to break even now, put more leverage on. And they got their asses handed to them instead of just listening to what he was trying to teach. So looking at this breaker right here, it's the parent breaker that ran all the way to the top, or you could look at this guy right here. So there's the body of it here. Continuation on the downside below these lows. We'll see where this candle closes for a potential swing. as long as we're still respecting the midpoint or mean threshold of this order block here, this could still turn around and go back up again. So you want to see it's closed there now. We got a small swing. Yeah, this should be a swing here too. A very methodical individual, and I love his patience. I think I took almost a dozen trades in here, and I was just trading the PD ray to PD ray stuff. But I have to admit, I was influenced by, if I was picking a direction, I was definitely influenced by what Michael was like, oh no, it's going this way, and I'm like, wait, really? I'm going against you. Oh, and then I chickened out. You know, I always defer to the higher authority. So what we did as a paramedic, I defer to the higher authority. If there's a surgeon or doctor there, you decide what you're gonna do. So I take a bit of profit and get out. But it's kind of great if you're checking your theory against someone like Michael's, then, and you're contrary to him. In this case, you might feel like, oh yeah, you're on top of the world. But look at the theory, look at his trading. He was trading on the 15-minute, executing on the 1 minute, but looking at the 15-minute PD arrays to aim for. And whatever I came up with, it was all based on a 1 minute chart. My PD arrays were on 1 minute and my entries were on 1 minute. So I was literally trading on a 1 minute chart. So you can't compare apples to apples, really. Looking at this mean threshold right now. Look at that breaker right there. All these guys are sitting inside him. So that breaker from there to there is also inside that 1 minute fair value gap. So when we cleared the top of this, back into the order block, watch that point right there for further continuation, either up, come back down on top of it and start running back up into this order block here in this fair value gap that's in the premium, the SIBI. And we have a SIBI down here now, so we've got, yeah, let's wait and see, because now we've got this one cleared out and we have a body above it. So we'll see if this one clears through here, or we start to show you a climb to a higher. So I want to see this little piece here hold inside this 1 minute fair value gap. If it doesn't, if it pops right through it again, and again we get a body that closes below it, this means that we've still got support inside that 1 minute inversion now. And again, we're still aiming for down here. Yeah, very low probability conditions. Look at this mess. It's a huge mess. I'm still just looking at PD array to PD array in here right now. Even though it's this big freaking mess, to try and trade that on a higher time frame, it's obviously clearly hard to do, or impossible to do right now. So I'm just literally trading whatever PD arrays I see inside these little ranges here. So this one here, I'm looking for an extension down now. I'm looking from here to here. I'm looking for a little price leg if we break that low for a run below or getting into this wick here. So that's what I'm looking at for the next price leg down. If this candle and this inversion fair value gap holds, I'm looking for that kind of price leg. So I'll just flatten this out here so we get an idea of what the potential direction I think it might go. And again, it all hinges on, for me, on this little fair value gap right here. Again, we have a little body pop below it. So you split that thing up into quarters. Look at that guy there now. See how the body of the wick gets to the top of that right there. Let me send this to the back here. Oh, that's the AM session. See that one right there? That's that little inversion one we just talked about. It came right back up inside it right there. So the body got below it. We came back up inside it. And we're continuing down. So again, still want to hold that. Nothing but love and respect for Michael today. Nothing but love and respect for the man. So we have a little swing point, up close candle that takes a run down below a little cluster of lows here. Not quite taking out that low, but return back into the breaker and continuation on the downside. So now we're getting bodies below here, still providing a level of support here. I like that. And if we take the fib tool and pull it on this high to this low, and just use our quarters, now I'm not taking any more trades today. I'm up for today, and I don't want to give it back in this kind of crappy environment now. Or one could say, hey, now because Michael's not trading, does that mean you're not trading? Well, I'm still going to tell you where I think price is going to go. You can decide on what you want to do. But right here, see that? We've come down and filled it, come back up till we find support at it, and bang around in between the discount array and premium array. Or are we going to start working through the mean threshold of this candle and start working for the rejection block and that low? And obviously if I'm right on the price leg, then we should be reaching down here. So I'll still call it just because I'm not trading it now. You'll see me still calling it live, and you'll see if I'm accurate enough on what I'm looking at. Again, that's the big linchpin right here for me for continuation, because as we're looking at, like Michael was saying, we're right in the middle of this range here at 50%. So now we're digging into the discount portion of that range. I love the fact that when he was talking about these returns to these old lows, and if the bodies don't break the lows, then he's much more bullish. What did you guys get out of that? What did you find was the most valuable piece of information for you? If you don't want to type it in on the sidelines here, you can always go to the Telegram site and share your thoughts there. Again, I do not want anybody bashing anything Michael did today. He did amazing. I love it. There's lots to learn there. And if all your focus was on his losses, then you really missed the opportunity to learn something there from a master trader, from the guy. So let's not do any bashing or peacocking or any of that other crap going on there. If you learned something today, by all means, if you want to share it, great. If you don't, that's cool too. So right now I wouldn't want to see this revisit here, so whatever stop loss I had sitting above here, I would move down into here now, just so you're aware of that fair value gap I want it to hold now. So I would hug my stop loss pretty tight, or if not, if you're not in profit right now, I would have that sitting right on there. I wouldn't want to see it come back above that little higher right there, because now that becomes an order block. I want to see provide support at it, and you see it right there, and you want to see it continue down on the downside, looking for your rejection block as a first official scale out. If you're looking at what Michael was mentioning about if we entered in off of this inversion fair value yet one more time right there, then you're looking 44 down to rejection block is 31. So you're looking at 13 handles right there. And that's 13 quick handles. We just hit it there. Just a fraction short of it. There's 13 handles. That was 13 handles right there. If you like 10, you got your 10. Mean threshold, you don't want to see that lose that. Look at that, sits right on it. Order block, you want to see it lose this one now if you want to see it continue down. Or is it going to come back and revisit that? I don't want to say that's the kind of like your line in the sand right there on that return. I wouldn't want to see it break that mean threshold. So now you want to see this one give way and push through like that. The camel toe entry. When he said camel toe, and he's flustered looking for another word, so he calls clouds. Oh, that's awesome. I'll be right back. We'll pee break. Keep an eye on that low. So you get the rejection block, you see that? That rejection block is hit now, and we've taken out that low. So again, you got to scale off something at the rejection block. Again, that's just my thing. If you follow something, if you follow me, I like those rejection blocks as places to take a piece off. And all we've really done is come back. The body has respected the inversion fair value gap now. So we're right back up into the linchpin again. There's the order block. Mean threshold is gone. We've traded through it. So that may be just another revisit of this. Hence the reason why you pay the trader. If you did take it out at the low, you got your how many handles is that? 45, 28. So almost 20 handles. Okay, so we have another fair value gap forming right here. Here's the shenanigans that occurs. So this may be just a simple run back up into that inversion and then roll over and come back down again. Time and price, my friends, time and price. But the bias and macros was useful. We'll go back and rewatch. Yeah, I definitely want to go back and rewatch that. I've made some notes on the macros, the 10 minutes before, the 10 minutes after. Here's 11 o'clock right here. There's 10 minutes before, spool. 10 minutes after, spool. So there's exactly what he's talking about, right? There's the 1050 run up. There's the 1110 spool down. What you say? What? 47 spool up. 10, then 1010 right here. 1010 spool down. Is there logic to what he said today? Dang, nabbit. Is it ever? So, do we get a spool down in the next 10 minutes? This is the shenanigans that I was telling you guys about on the bottom, the Crazy Ivan. Those who have referenced to, I guess I keep calling it the Crazy Ivan, but it's just that little quick look back before it continues back doing. Do you guys remember Crazy Ivan? I think I mentioned this one before. The hunt for Red October. When they're following that sub and they're on the bottom half of the hour, it turns and looks back over its shoulder to see if anybody's following it. That's what I'm calling the Crazy Ivan right there. There's a quick look back during that time and then continues down or continues. So always look for a Crazy Ivan at the bottom of the hour. So 4 macros, ICT alumni. Told them not to copy me. They would regret it if they did. What was he saying about the 4 macros? I think the 4 macros, so look at an hour between 10 and 11. So you have the one before. Unless he's talking about 10 minutes, each 10-minute macro, 10 minute, 10 minute, then 10 minute, and 10 minutes. So you have 4 over the course of a leading into an hour. So you got the lead into 1, 2, 3, and then 4 would take you to just over an hour. Unless he's looking at other ones down here, which I think the bottom of the hour, there's a macro at the bottom of the hour as well. So if that's 10, and you look at the 30, is that 10 minutes before the 30? And then 10 minutes after the 30? Oh, okay, maybe that's 4. You have to go back and look at that again. So 30. $40, $42, $42, $45. We're expecting a turn. Mean threshold. Order block. You want to see this loose for it to continue on the downside, otherwise we get a little swing, a swing forming here, a low on each side. And then we have the potential for a run up. And that was it. We did not get a new price leg down. If we take that high out, that's not the price leg. We could just come back into the body right there. And the wick. We can wick right up into the mean threshold of that 1 minute inversion again, which would be the mean threshold of that breaker, that parent breaker of that run down here, below this low and below that low. I expect to see some resistance off of this here. If we lose that mean threshold, then we're not going to continue on the downside, and that price leg is not going to happen. Yeah, it always makes sense. I always assumed that macros were the 50 and the 10, right? So if this is the bottom of the hour macro, to 50, we'll see if that one holds. Or we run all the way up into a premium again. That's the threshold right there. Say goodbye, Frenchy fry. Okay, we'll see where this candle closes. We'll let the wicks do the damage, and we'll see where that candle closes. Make that a little bigger. Let me just close this guy out of here so it doesn't get in our way. So again, rejection block. See that? Rejection. Oh no, we did take out the lows. Forget that. I was going to say rejection to rejection. So we have midpoint, mean threshold to mean threshold. See where this candle closes, and it closes above. Good. So now we have, now this, I want to see this level provide some support from here to here. I'd like to see that give us a level of support. There's a small little inversion right here now. I'll just put some lines on there so you get an idea what it is I'm looking at. Har. See, linchpin, once you lose that, now our mind has to shift to a different direction. We noticed that there was a short-term low occurring here. We did get support at the mean threshold. So again, we're finding places to anchor off of. So we wanted this to provide support. It didn't. Each one of these order blocks are giving up the ghost. Now, we want to see this inversion one more time, provide some level of support. And then you're looking for a premium level up here. So this order, these two order blocks here and that fair value gap there. Now that could technically dig all the way down into here. I'd love to see it come back and fill that and hit the top of the overall breaker. But we can just, that could be your first entry. This is where Michael layers his entries. One here. I like the next one there. Right there. And you want to go long now, right off that breaker. See how that nice reaction off of that? Now we're going to push through even further. Don't forget you got that whole thing that you can allow, so your stop loss has to go down here. Don't forget this guy's open here. You want to see that stay open. And you want to see this fair value gap provide a level of support. Mean threshold. And away we go. Are you guys finding this totally sexy or what? I loved seeing the reactions off of those levels. It pops it and just starts moving away from it. Now you want to see this level of support here now. You've already hit the mean threshold of that breaker. I guess you could come back and hit the top of it and then the wick, but we'll see if that happens. There's the top of it. Ooh. Not away we go. Welcome to Cortisol Central. So if our stop loss was down here, looking at this guy here, if it returns to that guy there, and like the wick does the damage down into here, that's what we're looking for now. I'm just looking to see if this is an area of the draw and on the wick, and the body closes here. It's not, so we said it could draw all the way down into here. Stop loss was going here. So now we've got this order block and that order block. If you entered in on there, I would move to the sidelines, take your trade off, your first and second. Move to the sidelines for a small loss and wait. These order blocks now are supported by this candle. So we're inside that. I'd like to see this now create a new leg up. If we come back into here, that would be an entry, stop loss here. 62% puts you right there. 70% optimum trade entry puts you right on the money there. So we'll see if we get a return to that little imbalance there. Well, not imbalance, that busy. So far, if you did stay in that stop loss here, still kept you in. I bet he misses walked. His missus walked past. Yeah. What was he saying about 4 macros an hour? So we're inside this inversion again. I want to see this candle give way right now. I'm going to find some support on top of that once again. Again, this is all the chop that you can experience, right? We're coming from the below. We're expecting it to provide a level of support. It doesn't. We get a body break above. You're allowed to come back into the inversion. Stop loss we had was just down in here at the top of that fair value gap there. We have we're banging around inside the top half of that now. We've worked the bottom half here. Now we're working the top half here. I want to see that breakout above this candle's high. There you go. Now I want to see that come back, touch this guy on the next candle, and then continue up for the next price leg. And here's your next price leg. So you can try, first of all, we'll take this one as a potential short price leg, stab into order block here. Those two that we've mentioned earlier. Macro, see that? 1150. Macro 1150. Price leg. Run up to here. Bottom half of the hour. Macro to a 40. 40 to 49. 50. So if you're still in that first one I gave you here, and you're layered in 1 and 2, and you did put your stop loss here, I chickened out here. But if you still kept it with that inversion fair value gap providing support all the way down to the bottom, it's allowed. That one did stay open. That's exactly what you want. And then we're going to finish off that price leg here, I think. And then if it does continue to go higher, great. We'll wait for the 12 o'clock macro to happen. But is there one that occurs during lunch hour? He says every hour. Did he not say every hour creates a, there's 4 macros every hour? That's the old high. Back to the fair value gap. Busy. Now push. But because it's so choppy and crappy, it may even come back into here. I'd like to see that stay open as well. So you had an entry, I gave you an entry here for this reaction to this rejection block here. And if you got the low as well, then you had a bonus on that. And then we're looking for it to continue down into here somewhere, and it didn't. It changed direction on us. We started trading back into here. So if your stop loss was moved to break even and you made a little piece here, then you would have got taken out there. Again, we're doing super sniping here. I don't have long stop losses sitting way up here. You're tracking them in real quick just to try and get your 10 handles. Then when we broke this structure here on the above, we look for this breaker here to trade back to. And we're allowed to get inside this inversion. We did. Stop loss was here. We traded back up through it. Didn't come back down to it, but did come back to this order block here. So if you're still in this trade that we got into here, then look at your mean threshold. Are these places you also want to scale out at? So be careful when you're looking at your, what is this thing? That way your scale out point. So that would be my terminus right there. Stop loss would be slammed right up. I'm out. I told you guys I'd be out about here just because this was, I chickened out inside something I didn't really need to. Put faith in your inversions. Obviously something I'm still working on. So you're looking at this price leg to continue off now. And I just want you to see that come to fruition. And in a volatile market like this, if you get that terminus, that price leg, then you're doing okay. But don't forget, we've gone to a premium array now. So if you're not scaling off, and believe me, if you would have got in on this breaker, which breaker did we talk about right here? That's 51 to 6. There's already 14 handles there. There's 16 handles there. If you're doing 10 handle runs, like he was talking about, start scaling out portions every 10 if you want, and move your stop loss to break even. I'm not going to tell you what to do. I'm just telling you what I'm thinking in my mind of what I would do. You want that to stay open? It did. And if you like what we're doing, smash the like button. Let me know if you like it. If it's not something you like, put a comment on the site saying you're nuts. I don't like what you're doing. I don't care. I got in at 17,446. 17,446. Right there. Good money. Top of the top of the consolidation. Good for you, Kirk. There's a portion out right there, at the top of that fair value gap. Also back into that breaker. So just be careful that that's not the top. I like to see this price leg continue out, but if it doesn't, then there's a logical level that it would turn at. See that big breaker right there? That big run down? Even though there's little swings here, it's more of a parent breaker because they're sitting inside that guy for me, but they're all lined up anyway. Body, body, and they hit the bodies right there. So if you get a reaction off of this, again, look at this. You want price, you don't want price to drop below this, come back to it, and then start to aim for this low down here. That's why you scale out a portion at your PD arrays. So you don't want to lose this mean threshold here. I'm totally in love with this stream. If I wasn't married, look out. You'd marry my stream, would you? Ah, you're great, Kurt. Thank you. You're good for my ego. So you got the mean threshold, you just tag in it. Watch where this candle closes. Look in here, be careful. I hope you're scaling. Just because I put this as terminus, remember I was telling you before the other day that price leg can be just a little below or a little above. I'm okay with that, but that's usually where you aim for. So you look for the PD arrays that support a level like that. Well, that would be it right there. And you're really trying to juice everything out of your orange there. But again, you may be looking up in a higher time frame, saying, oh, we're definitely heading up here now. I just look at this on a 1 minute PD array to PD array. Now, we've created a little swing point right here, and we have a swing point here. So now I will pull my fib tool from here to here, and this is, again, super sniping, boys. This is not long-term stuff. So there's 50% right here. Old high. Just tag the 50%, make me happy. Look at that. Boop. Okay, now we hit the 50%. Look at that reaction. Tag it. I don't care if it comes all the way back down. I just love the way it went. Pam, hit it. And it's like a zap of electricity. It hits it and reacts off of it. Oh, am I going to come back down and take another beating, or am I going to run away from that? So the faster the snap, the happier I am. That's a big electrical shock there. It's my defibrillator idea. Here's a paramedic analysis. You got a defib going on right there. Now we push into 62, filling the rest of that fair value gap, or do you want that to stay open? Moving into the mean threshold. Sorry, the consequent encroachment of this fair value gap right here. Okay, there's 62%. Now there's nothing else down there other than the mean threshold of this candle that would want to support price. So if we end up coming all the way down here, just wicking it and then pulling back, I'm okay with that. But if we have a body start closing down here below this inversion or this fair value gap, that creates as an inversion. We just want the wick to do some damage. So if the wick is permissible for me to come down to the mean threshold, tap it and leave, as long as we close above, like we did, closed above that threshold there, or that inversion. So we come back down, we tap the bottom of it one more time. Now you want to see that leave. That was optimum trade entry, 70%. We want this swing low to create now. If we waffle around in here, look for the next macro at 10. Are we going to blow through here, or are we just going to get on top of this, create a fair value gap, enter in for a long, and now we're starting lunch hour, right? So we go sideways, march sideways for the hour. See if there's still macros that occur inside the hour. This is kind of an observation moment. So Mungo, when we were talking about those macros. Let's look to see if there's not something that forms here. So the 10 minutes before to the 10 minutes after. There's the 12 o'clock. So there's your 10 to 12. And then you have that follow-up. That's an inversion, or the fair value gap here. So that's the one that forms in the 10 minutes before, 10 minutes after. What's it gonna do? See if it closes here. Let me start moving my little I like to every time I see something that's significant that becomes a linchpin inside of a range. See how that's the 50% of that range? See how you can get beat up inside there, from there to there? You're sitting right at that 50%, 62% of the range there. So that inversion, fair value gap that is forming now, once we get on top of it or below it, now starts to go, which way do I want to go? There's my linchpin in the middle of the range. So like Michael was saying, when you're in the middle of the range, you can get beat up in here. Again, we're still closing above. All these wicks, again, I'm looking for a wick that is permissible. Oops, crap. I didn't want that. We'll draw that out later again if I'm wrong. Mean threshold. And you've got 29 seconds to give me your wick and then pull back into the range. Ten seconds. Hit it. Are you guys not excited about that? Does that not like excite you when you see that? Tap it, and now we've closed below it. Dang, dang, dang. What does that tell you now? Has it tipped its hat to us and told us which direction it wants to go in the lunch hour? Do we want to take out these lows now at lunch before we continue to go higher? Let's wait and see what happens with the linchpin. Run back up to the high, close below. Ooh. You see how you can get banging around in the midpoint? This is where we were having the same problems earlier today with closing below it, and Michael wants to go short, and then it closes above it, so you want to go long, and then you want to close below it, goes short. You can see how you can get beat up in there. That closed below, so you would expect that's my line in the sand, mean threshold. It hit it, but we still closed below that spot there. Now we've closed. Now we're opening up on the high of it. So that is the support of that range. That was the permissible level that it could get back to with a wick, but I wanted the body to close above that. Remember, we were calling for this, and then a close at or inside that inversion. And we now get the inversion here. So now we're closing above it. Right there, good. Now return to the bottom or inside this thing to the mean threshold. If it comes back to this candle's high or that. So you got your three levels that we talked about over here. When it came down into here like this, we're looking for the same kind of thing here. And we're already at that order block up here. So that's the first level of support. Now you want to see that rejection block in the high, or the mean threshold here. There's a little tiny imbalances in here. Again, you're going for only 10 handles, so 58 to 68 would be right there. So you reach to the midpoint of this. And so far our price leg is still in play. Here to here. I think we took this one. You might take this leg here, but we're going to take that first one to there. There, that's a long there. Stop loss goes down here. You're between these two right now. You want to see that midpoint give way? Back in the middle of that range again. You can get beat up in here, holy cow. If your stop loss gets taken out there, get that midpoint going. And this is in the middle of the hourly lunch, so you're really in a tight little consolidation. So if you're trying to grab any pips or any handles, I'd say I take 5 to 10 handles out of that if you're looking at lunch hour, because we go sideways in lunch hour, right? And then we take out the, if there is a retracement, we'll take out the higher low that forms in the lunch hour or just before lunch. So now you want to see this continue to the upside. Tap that inversion one more time and head up. Waffling. Oh, he did buy back in. Well, Michael's been trading as well. He's making back his money now. Good stuff, Michael. I was very interested to see how the market went for my public stops today. So much so I want to see it again tomorrow. 16K people. That's so serious. That's so serious liquidity if even some dare to try it. Yeah. Even if you're looking at the 16,000 people, if they all jumped in on that, on his trades and took similar losses. That's a lot of liquidity in the market, man. Reply to me email is to when I function that considering Iron Beam one of the brokers email. So here we are again. See how you traded a body through it? You want it to go down. Then we have a body through it. You want it to go up. Now we have a body through it. You want to go down. See how that... And we're right in the middle of that range. Welcome to lunch. Oh yeah, he's going to get taken. The fact that a broker was allowed to be used. This means they can verify and track the results with that. Statement implies Toro was better in that regard than I have been reached. So there should be no advantage over one or the other. So we're going to continue watching this. I think I'm going to wait for... I can stick around now because I have an appointment at 2 o'clock my time, and that's another almost 4 hours away. So I'm going to be with you for a little bit first before I should be able to get the afternoon macro in here with you guys. Morning, Alex. How are you? Price action has been terrible this morning's session. Yes, it has. We've had a couple of wins here for, you know, we said to scale. I was telling people you better be scaling off some up here, even though I didn't hit our terminus. So we did have a return to the breaker, and that was a nice, almost full price leg up to a terminus that we're expecting up here. But we're still not finished there. We'd have to take this low out for that leg not to work. So like Michael says, it marks time. So where it ends at lunchtime marks time. That will be a gap. Wherever it starts off the next hour. This is just marking time right now. So it's like he cuts this out, this portion of the hour out. And then where it is creates like a gap that you want to trade back into to either continue to the upside or downside. So there's our linchpin. It's just hanging around between those the highs there, right? Lunch hour, just sit right in the middle. You got another half an hour. If you guys want to go have lunch, have your lunch. I don't think there's a lot going to happen here over the next little bit. Still nothing. Banging around inside here. Mean threshold. See that discount, premium. Come back into the range for a little bit. Now we're running out of PD arrays, so a little pop below the low. Another inversion. Do we have a body closing below here now? Back into this leg here. I wonder. Keep your eye on that level. Keep your eyeballs on that level. There's also this little fair value gap here. See that consequent encroachment, hit it nicely. Left up, come back, tagged it. Walking away from it. I love it, price action when it taps these things so nicely. Like, tell me that's algorithmically driven. So back into here. Look at that order block there. Will be interesting in tomorrow's session. Wonder if his stops will be targeted again. Targeted implies that somebody was after him. Somebody was trying to take him out. And if this is the gentleman's NASDAQ, I don't think they care about little Michael putting his thing in there. Maybe that'd be a conspiracy theory. You could imagine that they're there to try and make him look bad in front of 15,000 people, as the word will spread, and everybody will go, he's full of crap. We watched him lose 4 significant trades, and that puts the rumor mill out there and starts to diss Michael and disenfranchise him. And I think it's all, you could get into conspiracy theory crap if all you want, really, I suppose. I don't think anybody's targeting him. And I don't think they're targeting his stops either. I think the algorithm's just mucking about right now. I mean, like, what we're looking at here is we're finding logical areas to key off of, and then it comes back, and you know, we're bouncing off of internal arrays. Like within 3 candles, we're hitting a discount array, then hitting a premium array, then running out of arrays between here and here. In 1 candle, you start running out of that, so you start reaching for higher ones. You run out of those and either have to extend higher or extend lower. So we extend down, come back up into it again, run out of those PD arrays, and then you have to re-extend down one more time. So you're back up into order block here, threshold. They all make sense to me. They make sense. Even though they look like they're just doing a whole bunch of crap here, they do make sense in terms of where they're running to and where the arrays, if you look at the swing points, what range are you in and what inside what candle are you in. And if you look at each individual candle, and you can see which array it's reaching for, and when it's reaching for the higher one, it starts to run out with those, then it's either going to push up higher and extend the array higher, or run down lower and extend it lower. And these Inversions are great little places to look for opportunities to either key off of or return to or whatever. We're in the larger range right now still during lunch hour. Here's your lunch hour range. So look for this, if this provides some support. I'd like to see this provide a level of support now. And we want to start eating through this guy. If we lose the mean threshold of that candle and get back up on top of this again in the next few minutes, and again you're looking for those higher breaker array here. That is a swing, tiny that it is. That low is 58.25, 58.50. It is a swing, tiny as it is. Agreed, obviously the algo works in its own parameters, but today is clear manual intervention. There's no reason why the buy stop shouldn't have been targeted already. You think? Don't forget, they could be just booking positions here just to book a. Maybe they want to do a big run in the next day. Because let's look at the daily here. Let's go back to the daily and see what I see here. Okay, so we were looking for this. We called this a couple of days ago. We wanted to see this fair value gap form, and we wanted to see it dip into the fair value gap and then start running back up again. Well, we've had a dip into the fair value gap here, and now we want to see it run back up again. Well, it's kind of frozen out here. So do we have a couple of days where you mark a bull flag here, and then all of a sudden we get a run up, one more dip down into the fair value gap, and then a push up? There's nothing unusual happening here on a daily that you wouldn't see happening in a bull flag retail. I did little finger quotes there. Retail bull flag thing happening here on a 1 minute chart. You'd see a bunch of candles there and you'd say that was acceptable, right? And then you'd see the takeoff if you're a retail thinking bull flag guy. So if you did see that, you would allow even 5 to 10 freaking candles going sideways before it took off. No different on a macro daily. You could have 3 or 4 days going sideways, and then all of a sudden you see the big takeoff. So it only makes sense to me that they're booking right now. They ran out that side. They had a whole bunch of liquidity, ran the highs out, ran the lows out. Now they're back into that range again. So it's got to make its mind up. Do you want to run the highs and lows again? We go sideways, make another book, and then run that. I'm looking at this candle up high here on a 15-minute chart. I'm looking at that breaker right there. Up close candle. Took out these guys here. That hasn't even been revisited. There's lots of pockets of liquidity up there. And we have these equal lows that happen down here now. So target these. Perhaps target this one more time. Dipping into that fair value gap. Perhaps extending it a bit. Who knows? But that doesn't seem unlogical to me. After taking that ATH, I think indices could be generating liquidity on both sides of the market, hence the chop. Yeah, for sure. You've taken out the highs, developed some liquidity. A lot of people want to go short on this now. They want to slam this all the way back because we just took out a high, so a lot of people want to get short on that. So they're going to put a whole bunch of book in here. To me, it'd make sense for me to book a couple of days in here, above and below the market, run one side out, then take out the upside. And people might think, that we have a swing point happening right here, right? We also have a swing point. If you look at this, wherever this candle ends up for the day, dips down into 50% of whatever wick we have here today in the daily. That would be my line in the sand for bearishness or bullishness for that day. So if we open tomorrow, if we get another small range day today, and we just peter around here, and tomorrow we open up and get into 50% of the wick that was created today, if we start to trade below that and then we close below that, then my guess is that is a short-term swing, and we could continue down a little further into this BISI that's been created here. But my line in the sand for tomorrow is going to be right there, that candle's low, which is pretty much the 50% of the wick that we've created from where we are right now. Now obviously that wick's going to change. If we get back to the open there, let's say we get back to the open. Let's say this is a flat day. Let's have a little play around here because we're in lunch hour anyway, so let's have a looky-loo here. Let's say at the open of today, if we take from the open of today and we draw down to look at that, it ends up being right on the close of yesterday. See that? 50%. So if tomorrow, because people think this is the swing high, we could also get a swing low here. So tomorrow we open up, close, come down into this 50% of this range here, or 50% of this wick if it closes up here, and then we have a further push up. So that little swing is about to get taken out, and this becomes the swing. Does that make sense to you guys? Again, I'm just trying to play with some logic, not saying that it's actually that's what's going to happen, but that's where I'd like to see price close with a real flat candle here today. How's that for? Because then that would open me up for this idea for tomorrow. What say you guys? Does that sound interesting enough to you? And then I'm going to shuffle my little blue line there to there. Rejection block. I don't know if that, what do you guys think of that idea? And we're going sideways again. Looking at that order block there. Right back to the inversion. Back down to the mean threshold. Back up to the mean threshold. Highest body candle, mean threshold. Mean threshold to mean threshold. It's all making sense, man. Nothing is being unusual here. The algorithm's still ticking along, still hitting its arrays from candle to candle. You just got to study them and look at them carefully and say, all right, where are we at now? We're at this guy here and this guy here. We just ran above them, come back to the body right there, tagged it. Now we're getting some lift. So we want to get through this mean threshold now. Then you got rejection block. Then you want to start eating into that inversion again. We're also inside this dude. See what I mean? Now there's your rejection block. See how we tag it? There's a reaction off of it. Instantly there's a reaction. Come back down. And either push up. We have a little imbalance going on here now. See that little tiny imbalance? That'll be important later if it becomes a discount array. And there you go. Take the highs out. You got that candle there now. Mean threshold. Nice. Get through here. You want to get through that mean threshold of the, the consequent encroachment of the inversion now. Otherwise, all the way back down to here. See between that guy, the mean threshold still being respected. So we have this candle has to close above to keep looking at upside, otherwise discount. There's that array we mentioned. But it's still in the premium portion, so for me it needs to push through that. Get a wick down there, maybe a body, respect it. We haven't got a swing point yet. See where this candle ends up, and then we want a body push through this wick down here somewhere. Still inside this range. That depending on where that one closes now. So we have a swing, swing. That's the small little range you're playing in. Look for the PD arrays inside there. Now clearly they're not worth 10 handles right now, so you wouldn't be trading in this. There you go. There's your tagging of your lower order block. Now that's a breaker. Runs above the high, so we should get a reaction off of that, and now we're expecting this to close. I'd like to see a body close above that. Nope. So we got 1, 2, and then 3. So now we're back. We're between these two now. So you've come back up to the body of that one, and you're in the body of this one, or just short of the body of that one. So discount would bring you back into here. So watch those two candles, and this is no different again than if it was on a daily chart. If this came down to here, you'd say, great, if I'm opening up today and I don't take out that low and I trade back through my opening of my candle again, I'm looking for this candle's high, or this candle's body, this candle's mean threshold. Bang, right there. That's your trade day, a whole day right there on a daily candle. You're biased to the upside and the mean threshold. You hit that, that's a ton of candles. It's a ton of handles in one day. So what we're analyzing here on a 1 minute chart, no different again than it would be on a daily. The principles are still the same. And if it makes you feel better, let's say the days will look better, they look like that. So that becomes an important piece here. Still in the premium portion, but you know, we're above this candle now. And look what's sitting at the mean threshold of this candle. the imbalance. Now Michael said these are the weakest of his arrays. There's the imbalance. Mean threshold. See where this candle closes now? We want it to close above that point. Here. It did. Got to get through the mean threshold of this one now. Push through, you got to get through here. There's the mean threshold. Yeah, 15 minutes now before the next macro begins. We have another 5 minutes for the next little swing push. I think it's going to push up. Oh, we wanted it to close up for the day, didn't we? So if we retrace, we take these guys out, look for this fair value gap to fill right here. If we do run down into here, I like that area there for a run back up for Michael's inevitable high of the day. Is that mean threshold holding there? We're losing the mean threshold. That's good. We're calling for that. Now we want to see this one provide a level of support. A nice little fair value gap above that would be nice. And then trade back to it or into the mean threshold of it right there. And then start pushing higher. So just because I'm not trading it doesn't mean to say we're not watching the ticker and watching price action and calling it still as price is moving. Now imagine what we could do if we could call this in markets that were smoother. Imagine what we're going to do. We're going to decimate the market. And thank you to my 140 subscribers for turning up. I hope you get something out of this. I hope you find some value in it. And we'll be excited to see when markets start to smooth out a little bit and how we can start getting into it. I've got a prediction. I know you're not supposed to predict a high, but I got a prediction for the next run. Y'all want to see it? This becomes important now. Let's move some of these guys out of the way. I'm I'll show you what got body freeze on it. Wick did the damage, body freezes on it. Good. Now, where are you going, up or down? Get back into here. Where do we get into? That's the macro. 48. So do we have another run all the way back down again now? Now we're back into the mean threshold of that breaker. We're getting close to the mean threshold. Don't forget we still have these little imbalances up here too. I'll share with you my idea of what I'm looking at here for that's where I'm looking for price to go on the NASDAQ. Screen capture it, write it down. That's where I'm thinking for upside by May. And then we'll see. If it continues through that on May, then we have insanity after that. And that for me is the my terminus for this run up into here. Now, Michael says you can't predict the high. It's true, you can't. But here's my rationale, in case you're wondering. How do you come up with this craziness, Darren? See that? That was the price leg from there to there. Then the price leg from here to here brings you perfectly to there. So let me do this for you, because I love you guys. Thank you so much for turning up for my show. I appreciate it. You're welcome. If it goes there. Again, that's my only. I just saw this over this since 2020. We've had that price leg that was perfect, run up to here, and now we have a retracement, and we have another price leg forming here. So if this price leg continues up, I'm looking at that area right there. So think bullishness on NASDAQ. Like Michael says, just keep trading bullishness until we get a confirmation in a different direction. Well, if we are continuing bullish, that's my terminus where I expect something to happen. Either another candle like this to form here, then if that happens, you got 25, 50, and then 100% terminus would now start to look up here to this crazy level up here. So right now I'm just looking at that level, just under 2,000 or 20,000 for the NASDAQ. If you like it, write in your comments what you like, dislike, whatever. I'm okay with that. But just thought I'd share that with you guys. So that entry I gave you here, you're getting out a portion here above that high. Nice. Whilst we were talking over there, look at that. We have a breakout or break above market structure with a fair value gap come back to the fair value gap, hit it, and leave. Lovely. And if you were trading this back in here, if you took that logic back here, and you took that logic here as support level, you're killing it. And we're calling it inside a shitty day like this with pretty damn good precision, I might add. There's the rejection again. If you're taking a piece out there, if it takes the highs, then you finally got Michael's objective hit. Right there, bing, hit it. And from there to there is 30 handles. 30 handles. Highs are taken. AM session. There's that shenanigans time I was telling you about. That's the crazy Ivan. Crazy Ivan. Okay, here we go. We've just run some highs out, and we're coming up for the 1 o'clock. It's supposed to be the daily. I'm supposed to be over here in this one. My apologies. We're supposed to be looking here. Look for this high to get taken out for lunch. I'm looking for a turtle soup potential here. Takes it out. New York lunch from yesterday. Nope. There you go. Now there's Michael's final run up for the day. Finally cleared up as we were calling it here. So now you're looking for this. There's the 1 o'clock. The PM session starts now. We take out that high and look for reversal. Delicious. Looking for some soup. Well, if I was bold enough, I would have taken the turtle soup already, but I'm just looking for a silver bullet. A little safer. I don't want to give back all my profits I made this morning. We might just take out that high one more time before running down, so I'm just gonna wait. Mean threshold is holding. Big bold candle here down now. Crap, I'm just looking at getting it on this order block here. This breaker up here. Oh, mitigation, I guess it's a breaker. So we get short on that. Stop loss is going to go up here. Above, I'll have to put it above here. Go back to a minute now. Saw that turtle soup up there, did not take it. Now we get a retracement. My stop on my trade is going to be right there. I want to see that mean threshold. Hold price now. See where it closes. I want to see this mean threshold here give up. Push through that. Get a full body push through here now. I don't want that mean threshold to hold. I want it to kind of give up the ghost. You want a fair value gap to form in here somewhere. Next couple of minutes. I want to see this one rip down, create a fair value gap, then come back into it. No, I don't want to see this high. Actually, I don't want to see that high get taken out again now. This is when you see a bull flag give up the ghost and kind of just collapse. A lot of people are finding some support at this level here now and saying, retail would say there's support here. We're expecting higher prices, but I want to see this bull flag give up. If we had a retracement during lunch hour or after lunch, it will seek the liquidity created in the lunch hour. Yeah, I agree with you, Derek. Yeah, I don't like the fact we're eating at that already. This is where I get out and then it starts to turn up on me. Well, that took me out. Looking for that main threshold. It took me out right at that threshold. I was going live on that right there, shorting it, and it took me out right there. Right at the rejection block. We'd have to get a significant drop below this now to come back into here for me to get short on that now. I guess the low we're looking for here, if we get a retracement during lunch hour, then it usually takes out the low created in the lunch hour. We've taken out the liquidity on the upside. We've come back into the rejection block. Candles, bodies are respecting this breaker here. So we'll see if we get a leg down here, a return to these candles here before we start getting a short again. can see that running down into here now. We'll wait for cleaner price action though. Right into that little civvy. Now you want to see it go down. Still is so choppy in here. This is the drive down now. The big down, then the crazy Ivan back to here, and then the run down. That's what I want to see. Still not happening. The next 4 minutes you want to see, or 2 minutes, I want to see it run down with a big bold candle, create a fair value gap, crazy Ivan, return. If that doesn't happen in the next few minutes, that'll be it for me. I'll move to the sidelines and wait. I think I'm up to 16% or something like that. 16% on my account. There we go. I want to see a big bold candle down like that. Close below. Thank you. Come on, close below. There we go. Keep that candle like that. We want to see that close to a crazy Ivan back here now. There you go. This should create a fair value gap. right, here comes the crazy Ivan. Yeah, we may not get that. That may be the crazy Ivan right there to that piece. We may not get all the way back up here. We'll see what the next two minutes or so gives us. Nope, that's the crazy Ivan right there. This candle closes below this one. That's your crazy Ivan right there. But it didn't give us the entry we're looking for here. That inversion fair value gap right here, that's what's holding the price. And it closed right on it. Maybe we'll get one more poke at it. Right there. There's your crazy Ivan. Now look for that big run down into here. Did get off that one there. Well, we were looking to get in there. The Crazy Ivan wasn't quite what we were looking for. We were looking for a tad bit more. But that inversion fair value gap there I didn't mark out. Was a great place to hold price. Short there. Why didn't that trade go in? I wonder why that trade didn't go in. Okay, folks, so that'll be it for me for the day. I tried to get in one more short there, but it didn't go off. Aiming for the liquidity that was created before lunch. That's where you're aiming for down here. But kind of hold on to that idea and see if it pans out. And I will see you guys tomorrow. Or I'll meet you in Michael's live account tomorrow. And again, don't go trading what you see. Just wait. Let him just teach you what he needs to teach you, and then worry about your own trades later. And definitely don't go in live with the live accounts. No different than anything I'm doing here. So I wish you guys all the best. Thanks for popping in again after a kind of an interesting day. Hopefully you got to learn a little something here and there. And I will see you guys bright and early tomorrow. Take care. Have a great day.